Bring in show music, please.
This is Squawk Pod, and I'm CNBC producer Cameron Costa. On today's episode, zeroing in on the credit markets.
We've made a lot of bottoms in October, and please don't pick your bottom, or don't pick a bottom.
Worries over bad loans at mid-size U.S. banks are shaking up global stocks. CNBC's Leslie Picker reports.
The markets are just overall on high alert about cracks in the credit markets.
And how Charles Schwab is interpreting these concerns. The brokerage hit record revenue in the past quarter, and CEO Rick Wurster says he's not worried about credit, at least not yet.
We're not seeing the indicators that would suggest this is a broad-based credit issue yet.
Plus, the Ray-Ban Meta partnership is paying off, and in Washington, Treasury Secretary Scott Bessent is set to speak with his Chinese counterpart to talk trade.
The question is, whether that represents some kind of a breakthrough in this flare-up of tensions that we've seen over the past week, or at least maybe a platform where some kind of a breakthrough could happen.
It's Friday, October 17th, and Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good Friday morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernen. Andrew is off today. Yesterday, 10 of 11 sectors were down, but the biggest decliner was the financial sector. Only sector that closed higher yesterday was technology. It was up by just over 0.1%. But for the week, 10 of 11 sectors are higher. So again, a lot of back and flow, a lot of nervousness as you get into some of these numbers, particularly with what you're seeing from some of the banks. Big question is, and these are regional banks we're talking about, these aren't things that are necessarily key to their missions or key to what they're doing.
Canary.
The question is, right, if they've been a little too loose with their lending standards.
Canary in a coal mine, the VIX has doubled.
Right, the highest level, I think, since April, maybe?
Could look at the VIX.
Yeah, we should take a look at that.
It's doubled in the last 3 weeks. It's almost 30, and it was down at 15 prior to that. And then you got this Treasury's yields falling. Oil.
Yeah, the 10-year below 4%, which Rick was talking about that yesterday. I think I was listening to him on the exchange with you.
You were.
Right at the exchange, or right at the end of that show, the beginning of the next, where he was talking about if you close at 4%, below 4% today, that's something he would sit up and notice as a former trader himself.
Bitcoin was 125 like a week ago or something. Remember the big drop on Friday, 104.
Yeah.
And it's volatile, and people sell. The reason it gets correlated is people sell what they have in times of
because
stress.
It's highly leveraged.
Yeah, it's highly leveraged, and if you got it, you need money for other things.
Margin calls on something else.
Or whether there's margin calls on it. 4% again today.
Yeah.
Shares of regional banks, we talked about right at the top, tumbled yesterday. Fears of exposure to bad loans. This all has to do with, if you watch the stock of Jeffries company, which down another 6%. Zions, Western Alliance were among the hardest hit. Zions and Western Alliance said yesterday that they were victims of fraud on loans to funds that invest in distressed commercial mortgages. The losses were relatively small, but the hit to sentiment led to selling on Wall Street. 74 of the biggest U.S. banks shedding, if you add it up, shed more than $100 billion in market value. But that's like, if NVIDIA goes down a point, it's like the same thing. The S&P regional bank, not quite, regional bank ETF, the KRE fell by more than, maybe it's not an exaggeration, more than 6%. It's now down 4 straight weeks, and it's down 6 out of the last 7 weeks. The bankruptcies of 2 auto industry-related companies this year have also raised concerns about loose lending practices, especially in the opaque private credit market, which people are paying more attention to suddenly. Alternative asset management companies like Blue Owl Capital, Ares, and Blackstone also fell in yesterday's session. And I don't know whether the government shutdown is really having any effect yet, but
look, it's a little nerve-wracking.
You talk about TSA
long with no way
right.
of getting out of this, and that the two sides in the Senate aren't talking, except for over the media airwaves. I mean, that's a little more concerning. I don't think that's.
I think Monday it all changes on Monday. Schumer had to look tough, for all of his guests coming into the city for no king. When doesn't want to be on the spot on Saturday that he folded again.
Although they are getting, John Thune put through another vote yesterday, and he lost ground with it, with Angus King not voting on it. So if you're hoping that five Democrats will peel off, right, you're going in the wrong direction.
Well, they will eventually, but it's a 24-page continuing resolution to fund the government. It's got nothing to do with any of this other stuff.
No, and look, they've said, I think the Trump administration has dug in at this point that they are not going to negotiate.
No way.
I
wouldn't even open my mouth. I'd say,
But
Chuck, you got this.
The longer this goes on, the questions are: is this going to be material for the economy, for the broader economy? And those are the big
material
issues.
for a lot of people that
absolutely who aren't getting paychecks right now.
Exactly.
Right. Europe's largest banks are firmly in the red this morning. Across the board, you're seeing declines of 3.5% to almost 7% with some of those major banks. Despite today's declines, Europe's stock 600 bank index actually remains up more than 40% for the year to date.
God, that's something to think about. It is down. It looks terrible.
Yeah.
Up 40% year to date. Mm-hmm. Here's a look.
Our banks have been pretty good this year to date.
Right.
Too.
So we got to remember that.
And look, even with the concerns that you're seeing, all three of the major averages are less than 2% from all-time highs. So.
You know what the date is, though?
VIX is up. That's something to be concerned about.
You know what the date is?
Yes, it's October, late October. What is it, the 17th?
Every bottom we've ever made.
It's my niece's birthday today. Happy
birthday,
what?
Mark.
It's my niece's birthday today.
Good.
Happy birthday.
But every bottom we've ever made, seems like, that's exaggerating, but we've made a lot of bottoms in October. And please don't pick your bottom, or don't pick a bottom. The tech sector is also don't try to pick a bottom.
Bank stocks in the United States and abroad are under pressure. Leslie Picker joins us right now to break down some of the catalysts for that. And Leslie, this has been a slow boil, but yesterday we heard a lot more.
Yeah, a slow boil indeed. Pretty much every company with a loan book was in the red on Thursday. Credit concerns very much front and center. Regional banks plummeting, alternative asset managers plummeting. Jefferies tanked once again as its name has become increasingly synonymous with the First Brands bankruptcy. Credit concerns at Zions and Western Alliance really the catalyst that spooked the entire sector. Zions revealing in a filing that it is pursuing a lawsuit and taking a provision of $60 million due to what it describes as a, quote, apparent misrepresentations and contractual defaults related to a borrower. Western Alliance filed its own 8K as well, saying it doesn't need additional provisions related to its exposure to the borrower, which it had sued back in August, alleging fraud. The bank believes collateral coverage will cause it to avoid losses, but Western Alliance also had exposure to First Brands, so lots of questions circling this space. Bank of America, another name to watch, as analysts point out, it too has exposure to that same borrower, although its exposure is minimal and senior in the capital structure. Even though exposure for each of Zions, Western Alliance, and Bank of California stands at under 2% relative to their respective tangible common equity, the markets are just overall on high alert about cracks in the credit markets following the bankruptcies of two auto companies last month that sent private credit stocks roiling. And now you're seeing that spillover effect also in regional bank stocks. Several other regional names, including Regions, Truist, Fifth Third, Comerica, have reported earnings this morning, though, with results viewed as largely positive, guys.
Hey, Leslie, just to clarify, no problems with Bank of America. This is Bank of California that you're specifying. We saw the charts that were here, but you said America. And just for anybody who was listening, let's clarify that. Bank of California, go through that a little bit again for us.
Correct. Bank of California, they have minimal exposure, but it's senior in the capital structure. So they're kind of part of that same borrower contingency, but nobody expects them to have any serious issues as it pertains to that. Not Bank of America. Bank of America did not have exposure to this one borrower that's going through litigation with three of those regional banks and likely some more.
Okay. Leslie, thank you very much. I have the feeling we're going to be talking a lot more about this.
Let's hope not.
Well, we'll talk about what we see, but we hope it doesn't boil into something bigger. But again, it is of interest and it is of notice. Yesterday, the financials were the worst performer, 10 of 11 of those sectors down, but the financials were the worst performer out of the whole bunch, and it was a bad day. Leslie, thank you very much.
Tease will be next.
Next on Squawk Pod, what Charles Schwab is seeing with investor sentiment and the health of U.S. credit. CEO Rick Wurster joins us. Plus, a breakout year for his company. Thanks, Gen Z.
Turns out Schwab is pretty hip. We're on YouTube, TikTok. We're actually the most followed financial services company on YouTube, which often surprises people.
This is Squawk Pod with Joe Kernen and Becky Quick. Here's Becky.
All right, Charles Schwab reported record third quarter profits of $2.36 billion, riding that surge in retail investing. Revenue jumped 27% to $6.14 billion. That's also an all-time high.
Schwab.
Joining us right now for a look at what's ahead is Charles Schwab President and CEO Rick Wurster. And Rick, thank you for coming into set to talk to us this morning.
It's an honor to be here. Thanks for having me.
You like when I do that? You said you like
I love when you do it because it's very hard to remember financial services advertisements.
The commercials, they do backflips, trying the Voyo one with the funny little but that is very distinctive because you got that guy.
It's
that
very
actor.
memorable. He's a great actor.
Carl.
Yeah.
Carl. And
Yeah.
he does really bad. He's one of those financial analysts at a full service firm, and Schwab just undercuts him every step of the way, right?
He gets a little frustrated with us.
He does. Well, if we're looking at the earnings, things have, it's really been a banner quarter for you, not to mention a banner year to date so far. Let's run through some of these numbers on this. Total client assets up 17% year over year to a record $11.59 trillion. Daily average trades up 30% year over year. Every number you look at, you guys are kind of knocking it out of the park. But maybe one of the ones to really focus on is brokerage accounts. 1 million plus new brokerage accounts for the fourth consecutive total. That's a pretty big deal. What's happening? Why are these people coming in besides maybe the advertising?
I think they're coming in because we're delivering for our clients. And our clients, we don't make our clients make any trade-offs. We have a great digital app like others, but they can also call in, and we took 7 million calls in the last quarter of clients asking questions like, hey, I watched Squawk Box this morning and people are talking about credit. What's the deal? Should I stay invested? We had hundreds of thousands of people walk into our branches in 400 communities across the country. So the fact that we're there for clients, making a difference locally and helping them achieve their financial dreams, that's what's driving more and more clients to Schwab.
It is a hardcore fight right now between all the brokerages that are out there, whether it's Schwab, whether it's Robinhood, whether it's Morgan Stanley. You all are the number one in retail trading, no close second. I think you have 7.4 million daily average trades versus 4 million at Robinhood. Morgan Stanley has less than 1 million. But there is a war at this point to try and win these customers. What do you do in that fight?
Well, everyone's coming after us because we are the leader and there isn't a close second. And what we do to win the fight is show up every day and make sure we deliver for our clients. And I think for traders, what we offer can't be matched. The benefit of what we do is we have 1,000 former trading professionals that wake up every day and answer the phones for our clients. We put on 35 hours a week of live trading coaching for our newer investors. And we have what we think is the best platform in Thinkorswim, which we acquired from Ameritrade. So we win by delivering the broadest experience and the best experience in the industry, and we're going to keep doing that.
I was kind of surprised at the demographics you have that are coming in. It's younger than I would have anticipated.
It is younger. It turns out Schwab is pretty hip. We're on YouTube, TikTok. We're actually the most followed financial services company on YouTube, which often surprises people. And we're winning with the young investor. A third of our new to firm households are Gen Zers under the age of 28. And they're coming to Schwab because they want to engage in their financial life. They want to have a plan. They want guidance along the way. They want access to our research and education. And we're providing all of that, which is why we're winning with the young investor. Your
stock for the year to date, I think, is up about 26%. And by the way, that coincides with when you took over the company. So congrats on that.
Thank you.
What are the hardest things about what you're working with right now, though? With competition that's tough up there. Right now, you've got the market going in your favor with all of the new highs that we've been hitting. How much is that at risk if you get into some trouble, if you have these lower days, higher volatility days? What happens? You said you get calls from all these people. What are they asking about right now?
Yeah, we have 46 million client accounts, so we see a range of behaviors. We have a lot of active traders. Those active traders, they've been buying dips, selling the rips, actually. And we have a lot of long-term investors who, when they call, we talk to them about diversification. We talk to them about not timing the market, but time in the market. One of the interesting things we've been talking to our clients about more recently is that the S&P is as concentrated as it's ever been.
Does that concern you?
Well, we want to talk to our clients about the power of diversification. The top 10 stocks in the S&P today are 38% of the index. That's more than double where it was 10 or 15 years ago. And so the benefits of diversification and thinking about your portfolio are as important as they've ever been. And those are the kinds of things that we're talking to our clients about every day and trying to help them, because we're in the outcomes business. We're trying to help our clients achieve their financial goals.
Diversification into what, I guess, becomes the question.
Well, you can buy a broader variety of indices, different stocks, bonds. Bonds are actually cool again with rates coming down. Clients are more interested in actually owning bonds versus being in cash. So we're talking to clients about a variety of asset classes.
You're adding new things too. I think crypto ETFs are on the lineup, and you're looking to private assets.
Yes, we've been active in both. So in crypto, we do offer crypto ETFs, Bitcoin futures, closed-end funds. In fact, our clients own 20% of all the crypto exchange-traded products in our country. So they've been very active. We've seen visits to our crypto site go up 90% in the last year. It's a topic that's of high engagement. And for privates, we have made private investments available to our clients. We've done through third-party managers like KKR and Apollo and folks like that. And we've also stood up a team of alternative experts. If you want to invest in alternatives at Schwab, you're going to need to talk to a professional and make sure they're right for you, and to make sure you find the right strategy for you.
How much demand is there for those alternatives? Like, has it been what you expected in terms of the demand going into it? Has it been stronger or less?
That's about what we expected. There's a lot of interest in privates. I think anything that can potentially offer some diversification to clients is of interest to them right now, and that's why privates are top of mind for many retail clients.
Rick, let's talk about the credit issues that really roiled the financials yesterday. You're a bank as well as a brokerage. You see loans that are out there. What questions do you have from your retail traders, but also what do you see just in terms of how fragile any of this is, if there were bad loans that were being made as credit standards relaxed with good times?
A couple of thoughts. First, our bank was built for investors. We don't lend. We only lend to our clients, and we only lend against their assets. So we have never really had a credit issue in the history of our firm. And when we're not lending to clients, we're investing in government-backed securities. Mm-hmm. Now, when I look outside at the industry to others that are making those loans, I don't think we're seeing anything yet that's systemic. You don't see it in high yield spreads. Volatility's up a little bit, but we're not seeing the indicators that would suggest this is a broad-based credit issue yet. And also the economy, I think, is hanging in there. Unemployment is still relatively low, so it's hard to see at this moment it being a systemic issue.
No, I was going to wait till the end of the interview. I have I have golf stuff to talk to him about, so we could get all the substantive issues out of the way.
How many calls did you get yesterday from clients who were wondering about what to make of these credit issues and the pressure on the financials? We're sitting right near all-time highs for the major averages. But you do have little areas that feel like there are questions that maybe feel a little bubbly. And there have been a lot of questions raised about those things. The pullback we saw last Friday, the pullback we saw yesterday, again, from near all-time highs. But what do you get? What do you hear from your clients when that happens?
The big thing we hear is that clients' wealth is higher than they expected to be at this point because markets are up so much. Yeah. And we've ripped since April. We're up 35% off the April lows. And so a lot of clients are coming through our door saying, gosh, I have more money than I thought I would have. How can you help me diversify that? Or how I've got a really concentrated position. I've made more money in NVIDIA or Broadcom or Tesla. How can you help me get out of that position without paying big taxes? Those are the kinds of questions that clients are asking us. We try to steer clients away from saying, should I be all in or should I be all out? Those are really difficult decisions to make because one, you have to be right at the time you get out, and then you've got to get back in at the right time. It's really difficult. But we can help clients with a lot of ways to protect their assets.
What are ways that you tell them if they say, I'm really up in NVIDIA, what do I do at this time of the year? Are you telling them to balance it off for tax purposes against something else, or what do you?
There's lots of strategies that they can take. They can collar it using options. Yeah. We're offering exchange funds for clients, which allows you to exchange a concentrated position and get a diversified index back without any tax consequences. Mm. There's new long-short strategies that you can use to offset the gains in those positions so you can reduce the size of your position over time. There's lots of things we can and are doing for clients. And our advisors, our 16,000 advisors that we support, are doing for their clients. I'd say it's the hottest issue of the moment is what do I do with my big gain in some of these stocks that have really run.
Those are some first-class problems to have.
They are, yeah.
How's Chuck?
Chuck is doing really well.
The 88.
In fact, he called me last week, Joe. You'll appreciate this.
Yeah.
And he had a little, little spirit in his voice. And I said, Chuck, what's happened? He said, well, I just played a great round of golf. And so I said, Joe, the natural question, did you beat your age? He said, yes, by 13 shots.
Wow.
How about
75?
that? He shot a 75 with two
We're
double
talking
bogeys.
Charles Schwab.
That's
Chuck Schwab, yeah.
That's the only goal anyone needs to have in life. Because either you live old enough, if you're horrible, you live to 99
That's
and
your
shoot your age. Yeah, that's my If you're horrible, you live to 99. And if you shoot 75 when you're 75, you have a lot of time to play some golf. So you're doing okay. But I wondered about it. And you were captain at Villanova? Of the golf team.
Yeah, you wouldn't know it if you watched me golf.
Well, what I was going to say is to all the Charles Schwab shareholders, he's like a 25 now. So you never play golf because you're in the office 18 hours, like working on, trying to maximize profits for Schwab.
100%. The only time I go on the golf course.
What is your handicap now? What, like
I'm a
five?
5 handicap.
You're 5. Yeah.
But the only time I go on golf is I'm trying to get my 12-year-old interested in it. So I take him out, and the main thing is to help him learn patience because you have to be incredibly patient to like the game of golf.
You do. And you don't have to be a bit of a masochist, I think.
Yeah,
right?
exactly.
A good walk, spoiled.
Yeah.
And you must get to play Pebble. And I guess what Chuck did for Pebble will last forever, I think, and those other guys that with the par 3 and everything else.
He's the most generous man in the world. He's done so much for the game of golf. He's also, I think, done more for the financial services and the retail investing industry than anyone else in our country. So
when you got hired, did he know that you had been captain of Villanova, or as you were?
I don't think that he knew I was a golfer,
team?
but as I was getting to know him, he took me out for a round of golf, and I was incredibly nervous.
Yeah.
And I hadn't been playing any golf, and the first 8 holes I went 4 under par.
Oh.
And he said to me on the walk to the 9th tee box, he goes, "Do you ever work, Rick?"
And that's when you started shanking.
And then I didn't play as well the back 9.
Words I've never said in my entire life. On the first 8 holes, I was 4 under par.
Yeah.
I have never.
I had it going. I was lucky.
I have never said that, Rick.
Well, Rick, we
come
are
back,
very happy that you're here, impressed with the results that you put out, and we hope you'll come back soon.
Well, thanks. I love your show. Thanks for having me on.
Yeah,
Thank you.
We appreciate it. Rick Wurster.
Still to come on Squawk Pod, the rest of today's stories that got us squawking. Ray-Ban parent is reaping the benefits of its partnership with Meta.
You got smart glasses?
Yeah.
What do they do? You bought? Who are you, Sorkin?
I bought him like a year and a half ago.
And a check on the president's approval ratings from Steve Liesman.
Independents vote economics. It's that simple.
Plus a very special report from Washington, D.C.
I can report to you exclusively today.
We'll be right back. You're listening to Squawk Pod from CNBC. Here's Becky.
Up and Becky, Q.
Shares of EssilorLuxottica are sharply higher. The French parent company of Ray-Ban reporting an 11.7% jump in sales in the most recent quarter. That company said a healthy amount of its revenue growth came from its partnership with Meta to sell smart glasses. The company now offers smart glasses under the Ray-Ban and Oakley brands, and it's working on a Prada version as well. And I have to say, it is a game changer. I've got a pair of them. I would have never worn any of the earlier weirdo ones, but these are nice glasses, and you can't really tell.
What do you mean? You got smart glasses?
Yeah.
What do they do?
They can, if you want to leave the video on, you can record all kinds of stuff. Like
You
your
bought?
phone.
Who are you, Sorkin?
I bought them like a year and a half ago because
You got smart glasses?
I do. They're pretty cool. They're like regular Ray-Bans. They look good.
Do you buy things that you order on the internet?
Yes.
Have you done that?
Yeah.
If you order-
I am the primo.
I've done that. I'm
the
kidding.
OG
You are.
shopper. I've been doing it since the 1990s. I wrote an article for the Wall Street Journal back in 1998 where we ordered an entire Christmas online.
So which would you buy, like designer type? Or what are the ones
Yeah, it was Ray-Ban. I have Ray-Ban ones.
You have Ray-Ban?
Yeah. They're pretty
When do you
nice.
wear them?
Never, almost never.
Yeah.
But I do. I mean, they're cool in that if you want to do videotaping with the kids, you can do it with like hands-free, and you're running around, you're videotaping all that, and that's pretty neat. Like those are some cool glasses. You can also talk to them because they've got the like the things right through them.
and say, and they'll.
Yeah, if you want to do Hey Siri, look up some things.
Oh, great! So you can now, through your glasses, get the most ridiculous answer from Siri.
My biggest thing is using it as a video camera. It's kind of cool to do. Like if you're running around through an apple orchard or something, you could do it hands-free with
different apple.
Yeah.
Everybody waits for Saturday during football season for the NCAA. Steve Liesman is here with the CNBC All-America Economic Survey is out. These guys, Steve, senior economics, were good to see you with a look at some of the athletes' views.
It's not just athletes.
It's not all Americans.
The coaches as well.
Because those are funny. Those are funny interviews. You got to admit when you go in and ask.
I did that once, When you after one of the Super Bowls, we talked to them.
You go in and ask them, "What do you think of Jay Powell?"
But this is
what about quantitative easing? Like you ask them that.
They have some good opinions on that.
Some of them really do come back and say, "I think they've been way too loose."
One of my
monetary policy.
We don't have time for this. One of my first investigative stories was talking to football players, NFL players, about how they lose their money, and it was an interesting story about money management and how they decide to buy things and get.
So for the, would you say, 50th time, we should point out this has nothing to do with athletes?
This is a nationwide survey.
But how many times do you think? Is this maybe the 50th time that
How many quarters have you done this?
That I've said
2007.
that I've used that tired joke.
We took a little break during 2009. We only did one survey because of.
That's what I would say. How many quarters?
But it's a lot of quarters, and I'm not sure the joke is old. Joe, here's the results. Americans' views on the economy turned more negative in the third quarter, deepening concerns about jobs and inflation on the outlook, and those sentiments, along with the shutdown, dragging down the president's overall approval ratings further into negative territory. The CNBC All-America Economic Survey of 1,000 people nationwide, finding that President Trump's overall approval dropped just modestly to 44% from 46%. Disapproval rose 1 point, but it's the economic approval that fell a more substantial 3 points to 42%. Disapproval rising 2 points to 55%. And this is continuing a second-term trend where President Trump's economic approval is running below his overall approval. He's averaged a net minus 11 in the three surveys so far in the second term, and that compares to plus 5 on net approval on the economy in his first term. Overall, his overall approval is slightly less negative than the first term, but now it's below. Hold on a second, Becky, you're jumping the gun, but you are right as usual. Economic approval hurt by views on specific issues and overall sour views on the economy. Take a look. The president's net approval is plus 5 on his handling of the southern border. That's his big issue there, and it's down, but still positive. Turned negative on deporting illegal immigrants. Improved a bit on foreign policy, but it's still negative, and it's turned substantially, Becky, more negative on tariffs. You can see there, the president remains deeply underwater on this issue, inflation and the cost of living, not doing well there. The percent of Americans optimistic now and optimistic about the future of the economy on average this year has risen to 24 from 17. But look at what's happened to pessimistic about the economy, rising to 57% from 40% on average.
So
back
fewer
in 2024.
undecideds.
Yeah, not many people undecided on that issue. When it comes to who will be blamed for the economic fallout, the potential economic fallout from the shutdown, 53% of the public blaming congressional Republicans on the president, compared to 37% for congressional Democrats. That's a little wider than some of the other polls that have been out there. Yeah. The survey has a margin of error of 3.1%. 40% of our respondents were Republican, 38% Democrat. We do not solve for that result. In general, the president maintained overwhelming support of his party and equal opposition from Democrats. The key to the results is that independents are leaning really negative on the president, minus 20, minus 30. Dems are minus 90, Republicans plus 90. So then you figure out where the independents they're minus 20 to minus 30 on some of these approval ratings here. I was surprised by these results. I'll tell you why. One is I don't see the economy as that bad.
No.
In the overall economic data.
Markets are all-time highs.
We live in this milieu where we come in other than the last couple days, and the stock market's up and everybody's buoyant. That's not the case when you talk to average Americans here, according to this poll, when it comes to the economy. They're down on jobs and they're down on inflation, and they really dislike these tariffs.
I was listening to a conversation with Christopher Waller yesterday, and he made some really interesting points just about how the labor market is probably much weaker than we anticipate. And I
Because
know
of
there are things. I know that
participation.
we've talked around some of these
Yeah.
issues, the feeling
I
of
heard that.
participation being
Yeah.
down. But because we are losing basically people in this country at this point, zero immigration, if you look net,
Right.
that if you were to keep it at those consistent levels, we'd probably be more at a 5% unemployment rate. And that might be something. That's why he thinks we need to cut rates more quickly and is kind of sticking out for that. But if that's the case, it would help explain why people don't feel so good about this economy.
You hear a lot of comment from Fed officials about higher income people propelling the economy and consumption here, whereas low and middle income, I think they're feeling it. Look,
But grocery prices.
I guess the president's trying to bring us through a transition here. That he has a very different idea of how the economy should be structured. And
global economy,
and perhaps there are benefits down the road, but it looks like the transition here, and actually, Scott,
the government surplus numbers yesterday were something I really
not really. They were less. There were some specific changes in there, and September's a surplus month, and you add the 20 billion or so or 30 billion of tariff numbers.
Right, the tariffs numbers helped with that.
Yeah, but the only thing, we're up 36% since the panic of the tariffs. It's, maybe we're going down from here.
No, that's what I'm saying,
Maybe we're
Joe.
going down from. The other thing is, I think Trump will, on any issue, will never get above 40%, basically, with most polls. And it goes with the government shutdown. No one in their right mind doesn't realize that a continuing resolution that's being blocked in the Senate by Democrats is Republicans. It's just, if you do, maybe mainstream media, you hear enough of mainstream media. It's party in power. But even that doesn't explain it. It's a 24-page thing that Schumer voted on the first time. He's got his own individual problems with AOC.
A lot of people to understand that,
Well, and if you start talking about, talking about people dying, and if it's the Obama. If you don't, these hyped up super subsidies from the pandemic, which are really, it's not the Affordable Care Act, it's the Unaffordable Care Act. Something needs to be done because premiums are skyrocketing, not because of the expiration of subsidies. But no one ever went broke. And I won't finish that statement, but if you can't figure out what's going on here, I mean that's a sad poll number.
I will say this that
But I will say about polls. You remember the person in Iowa that had to resign after she took that poll? She had Kamala up 3 points and she lost by 14.
And we were within.
So your answer is your poll sucks.
No, we only get a poll when we actually when we go
to the national
when we go to the whole a national election. We get a real
0.2.
poll, and we make it.
Yeah,
November is going to be interesting in Virginia. We'll see Virginia.
Well, that's what I wanted to bring the conversation.
Virginia,
I don't know
New
how
Jersey.
much time we have, but I have to admit, I'm not sure how much these political polls at this juncture matter, and let me explain why. The key to what may or may not happen in Congress is the extent to which congressional Republicans break with the president. There is no...
Or Democrats break with Chuck Schumer.
That will never happen.
Let me leave that to the side for a second.
Or Hakeem.
That's fair enough.
They're the Borg collective.
But even while these numbers look like they're going away from the president, and now let me just add one addendum here, which is that the Republican pollster pointed out, Joe, that these numbers for the president may not be that bad considering we're in the middle of a shutdown. That's an asterisk worth putting out there.
Right.
But if I don't see in these polls, because of the popularity of the president within his own party, and the fact that there are so few contested congressional districts, I'm not sure how much it matters at this point that public opinion is moving away from the president when it comes to these issues, because I don't know that there's a lever there.
There was a poll yesterday. The previous one, I think it was Fox News, but Cettarelli was down 4 in the most recent poll.
Closest.
That's almost within the margin of error. You had down in Virginia, you had the Spamberg or whatever her name is, unable to disassociate from those comments about killing someone's kids at a debate. So I don't know whether Winsome Sears has a better chance. We had Youngkin on, of course, but he's going to say, yeah, Sears is going to win, but he's obviously got a horse in that game. But it should be interesting. And then
I would just say
Mike McJohnson said they're picking up seats in the midterm, but that might be.
Well, on the statewide things, not the congressional districts, but on the statewide things, that's where the independents are going to matter. Independents vote economics. It's that simple.
Okay. Steve, thank you.
Eamon Javers has some news out of Washington, and he's actually on the phone, so it must be important. Hey, Eamon.
Yeah, good morning, Joe. I can report to you exclusively today that Treasury Secretary Scott Bessent and Chinese Vice Premier He Lifeng are going to speak by phone to discuss the ongoing trade negotiations between the United States and China. I don't have any other details here on the timing of this phone call today, the content of it or what the next steps will be. But the fact that they are going to have this phone conversation is notable because earlier in the week, the Treasury Secretary declined to say specifically at his press conference that he would be speaking to his Chinese counterpart. He said that the Chinese are in town for the IMF gatherings, that there are certain dialogues going back and forth, but he didn't say specifically that he and He Lifeng would be speaking. Now we can report to you that they will be speaking on the phone today. And the question is, whether that represents some kind of a breakthrough in this flare-up of tensions that we've seen over the past week, or at least maybe a platform where some kind of a breakthrough could happen, guys. So that's what we've got.
Eamon, it's the market was down. It actually turns around, and we were pointing out that that was purely based on I think some of the stuff that President Trump said on an interview this morning about China. I guess my question is, could we expect something really positive from this conversation between Bessent and the Vice Premier, Eamon? Because last weekend when the president said everything's going to be fine, Scott Bessent really chafed at that journal piece that said that they're just watching the stock market and that they base their comments on what's going on in the stock market. And again, you could say that once again, the president today said, no, it's not. Those big tariffs are not going to last. Should we believe that, or should we attribute it to watching what the market's doing? Is there real progress?
We don't know. Like I said, I don't know what's going to happen in this call. The fact of the call itself, I think, is notable, which is why I'm calling it into you guys. But we don't know what the content of that call is going to be. And obviously, Bessent did bristle at that piece. The U.S. side, of course, doesn't want it to look as if the Chinese side has more leverage in this negotiation than they do. And that's sort of what that Wall Street Journal piece was suggesting earlier this week. So it is very hard to say. And I think ultimately no large breakthrough can come until the two top leaders meet face to face. And what we're told is that meeting is still on later this month in Asia. So I don't think a Bessent-Lifeng call will be the final thing, but it's certainly something that would have to happen before the final thing, if you get that.
Yeah, they don't want to be. Also, don't want to be seen as they're basing these, major global trade, that the stock market is going to cause them to waver or change what they want to accomplish long term. They certainly don't want it to look like that, but the market does respond, Eamon. Anyway, thank you.
Yep, absolutely.
That does it for us today on Squawk Pod, and that's it for the week. Thank you for spending your week with us. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin, weekday mornings on CNBC starting at 6 a.m. Eastern. The smartest takes and highlights from that TV show are right here on Squawk Pod. Make sure you follow us wherever you're listening now so you never miss an episode. We'll meet you right back here on Monday. Have a great fall weekend.
We are clear. Thanks, guys.